Hi friend, welcome to the company law update. Delhi ROC issued a adjudication order for the violation of section 42 of the Companies Act. In this case, there are three violations. First violation of section 42 subsection 4, that is the utilization of the money prior to the filing of the PAS 3 form. And second violation, that is the not opening separate bank account for depositing the proceeds. And third violation, that is the delay in the filing of the form PAS 3. This is a very important adjudication order. In this adjudication order, let's see the facts of the case. Company registered at Delhi, and as per financial data, company is the company having paid up capital 36 crore 50 lakhs, revenue from operation and nil, other income 37.39 lakhs, and hence profit for the period 11.65 crore. And holding company, this is holding company, no subsidiary company, no section 8 company, and note company registered under other act. And let's see the facts of the case. Company and its director have suo motu filed application under section 454 void form GNL 1 on 10th March 2022 for adjudication of non-compliances, that is technical default of section 42 read with the section 62 of the Companies Act. Further, in order to seek clarification, explanation regarding adjudication, this office issued letter to the company on 15th June 2022. In response to this, company submitted its reply to the office on 18th November 2022. On the basis of the reply submitted by the company and records available on the MCA portal, it is observed during the financial year 2018-19, Board of Directors of the company in its board meeting held on 27th August 2018 approved issuance of the 34 lakh 40,000 equity share to its holding company with face value of the 10 rupees amounting to the 3 crore 44 lakh on private placement basis. Further, shareholder of the company also approved the issuance of 34 lakh 40,000 equity share to its holding company by passing a special resolution in general meeting on 20th September 2018. Company has also filed e-form PAS3 on 27th November 2018 with ROC office. In terms of the provision to the section 42 subsection 4 of the Companies Act, company shall not utilize money raised to private placement unless allotment is made and return of allotment is filed with the ROC under subsection 8. However, the company has admitted in its letter dated 18th November 2022 that it has utilized the money prior to filing of Form PAS 3. Further, in terms of section 42 subsection 6 of the Companies Act, money received on the application under this section shall be kept in a separate bank account in scheduled bank. This company was required to maintain a separate bank account for the money received. However, the company admitted in its letter dated 18th November 2022 that it did not maintain a separate bank account. The funds were received in existing bank account maintained by the company, HDFC Bank. Further, subsection 8 of section 42 read with the rule 14 subsection 6 of the company's prospectus and allotment of security rules 2014. Company was required to file e-form PAS3 within 15 days of the allotment. However, the company has filed PAS3 with ROC, wherein there is a delay of 18 days in filing of return of allotment. That in view of the above, a so-called notice issued to the company on 13th February 2023 to company and its applicant, and in response to the said so-called notice, the subject company submitted a reply on 15th February 2023, and on the basis of a request made in the said reply, matter was fixed for hearing, and authorized representative appear on behalf of the company and submitted reply as under that first, inadvertently the issue of the share was done through private placement route. However, the intention was to make the right issue option by the company, as this involved a plain infusion of the additional capital by the holding company only. Under Section 42, Subsection 10 of the Companies Act, the adjudication officer has discretionary power to levy a penalty based on the facts and circumstances of the present case. It is submitted that Section 42, Subsection 10 of the Companies Act provide only for the upper limit up to which penalty can be imposed, but it does not provide minimum amount of the penalty which can be imposed. Therefore, authorized representative is bound by the provision of Rule 14 of the Company Adjudication Rules. And while adjudicating quantum of penalty, adjudicating officer shall due regard size of the company, nature of the business carried on by the company, injury to public interest, nature of default, reputation of the default, the amount of the disproportionate gain or unfair advantage, however quantifiable, made as a result of the default, the amount of the loss caused to an investor, group of investors created as a result of default. In line of the above rule is submitted that the company is infrastructure company which is capital intensive, and entire funding of the project was made by the foreign company. As far as the nature of the business is concerned, is business of the developing, designing, construction, operation and maintenance of solar power plant, which is highly capital intensive in nature. And in default made by the company was neither prejudicial to the interest of the public at large nor to any investor or stakeholder, that the company has not repeated such default till date, that there is no question of any disproportionate gain or unfair advantage, as the issue was entirely subscribed by the holding company and was only addressed to it. As far the statement of financial statement for the financial year 2021-22, it is concerned that it is seen that the company has got no revenue income from operation in the financial 21-22 and preceding year financial 2020-21. The company has total profit before tax is the 11 crore 65 lakh, which is primarily on account of exceptional item of the 12.9 crore. The reserve and surplus of the company were 3 crore 12 lakh, and in the previous year was also a negative, that is the 14.78 crore loss. Taking into account the facts of the case, including the submission made, it is noted that there are the violation of the three sections, subsection 4, subsection 6 and subsection 8, for which liability arise subsection 4 and 6 of section 42, there is a liability arise under section 42 subsection 10, and further there is a default of subsection 8 of section 42, there is the liability arise under section 42 subsection 9 of the act. And you can check the provision of the section 42, and in adjudication order, the subject company does not get covered under the purview of the small company as defined under section 2 subsection 85 clause 85 of the act. However, imposing penalty in respect of the violation of section 42 subsection 4 and 6, considering to the given to the rule 3 rule 12, as the amount of penalty is not hard coded under section 42 subsection 10, as was rightly argued by the authorized representative of the company. The submission of the authorized representative clearly indicate that there are no aggravating circumstances on account of which a higher penalty can be levied. Even in the absence of any aggravating factor and the fact that it is a suo motu application for adjudication, it is thought fit the amount of penalty should not be less than section 446 of B, which provide penalty in case of a small company, OPC, producer company, and a startup. Now, in exercise of the power conferred on the undersigned, and having considered the reply submitted by the subject company and hearing of the authorized representative, ROC imposed penalty on the company and promoter and director. First, for the violation of section 42 subsection 4 of the Companies Act, there is the penalty under section subsection 10 of section 42, that is 20 crore, which is reduced to the 10%, that is not for 20 crore, that is on the company, that is the 2 lakhs, and on the official and default promoter 1 lakh each, that is the here considering the penalty on the basis of the above reply, that is the this maximum penalty, not impose maximum penalty here. That's why penalty is the reasonable penalty imposed by the ROC, that is the 2 lakh on the company and 1 lakh each on the promoters of the company. And for subsection 6 of section 42, there is default, that is not opening separate bank account. There is also maximum penalty under section subsection 10 of section 42, that is 20 lakh, and here penalty imposed is 2 lakh on the company and 1 lakh each on the promoter of the company. And for subsection 8 of section 42, there is a delay in the filing of the section form PS3, that is the penalty imposed on the company, that is the on the company 1,000 each per day, that is the for total 18 days default, the 18,000 on the company and 18,000 each on the promoter of the company. And name of the party mentioned in table is directed to pay the penalty amount as mentioned in the table. The said amount of penalty shall be paid to the online by using the MCA website within 90 days of the receipt of this order, and intimate this office with proof of penalty paid. Appeal, if any, preferring against this order filed within a period of 60 days from the date of the receipt of this order in prescribed form, and in case of the violation of this order, not non-compliance of this order, then subsection 8 of section 454 attack. Thank you so much for watching this update. Please careful in complying the section 42 and read with the section 62 of the Companies Act, because there is a maximum penalty imposed on this in this case. So please careful. Thank you so much.